Hello, my name is Martin Zeman, and today we'll talk about the 5 tips every successful trader should follow. Welcome to another video. I think it's important to set the table right from the beginning and explain why we actually talk about what it takes to be a successful investor and kind of the basic strategies that people follow when they invest in the stock market. I'm filming this in June 2020 on the backside of one of the fastest rallies in equities that followed the huge sell-off we have seen in March during the coronavirus pandemic. And right now, a lot is being written about those two kind of camps being pitted against each other. On one side, the army of retail investors, arguably fueled by the stimulus checks and kind of following the mantra that David Portnoy espouses of stocks only going up, versus, on the other side, veteran investors like Warren Buffett or Howard Marks. And the truth of the matter is, statistically, over the long run, 80% of retail investors actually tend to lose money. It's important to understand that the successful hedge fund managers and asset managers that allocate money successfully and professionally follow some really basic rules and strategies that I think it's important to revisit from time to time. And so whether you're an experienced investor or just now getting in the game, I think it's important to have a set of rules that one follows when making decisions around investing in the stock market. So the first thing I want to mention here is really extremely fundamental and basic, and it almost doesn't deserve to be mentioned here. But the first rule of investing is really you should only be investing the money that you don't need, and you should only be investing the money that if you lost it tomorrow, it's not going to change your day-to-day life. And unfortunately, I still see so many people commit this mistake of having some funds for a down payment down the line, something they'll need it for 6 months from now, and they'll put it in the stock market. And when they do that, it really changes the way you make decisions, because subconsciously, you can't actually afford to lose that kind of money. And so when the trade or whatever investment you put this money into starts going against you, you're almost paralyzed and unable to do anything about it because you really don't know what to do. So rule number 1, only invest the kind of money that you can actually afford to lose and not really feel it in your day-to-day life. So the second point is really all about managing your entries and exits well. And I think it's important to acknowledge and accept the fact in the beginning that you will never be able to get the whole move. You'll never be able to buy at the lows and sell at the highs. And so once you accept that fact, you can focus on how do you actually buy and what your timing is going to be for your investment. Personally, I like to have a shopping list of companies that I focus on, that I know, that I have researched, and that I want to buy. Now, the question is, how and when do you buy them? So a good strategy is to try to stack the odds in your favor. And what I mean by that is having multiple reasons for your investment at that particular time. So this could be anything from a change in management, change in strategy, new investor that's significant that's getting involved in the company. It could be a positive technical picture of the stock price going through an important resistance and starting a new trend. Or it could also be bad news and the company is selling off more than it deserves. But try to have multiple reasons that kind of justify your investment at that particular time. And that leads me to how do you exit your investment? And the biggest investment mistake that I see inexperienced traders make is not really knowing when they will exit and how they will exit. They don't even know when they will exit if they make money. They kind of hope it's going to run, and typically they become greedy and kind of forget to take profits and the investment pulls back and they never realize those paper profits. Most importantly, the biggest mistake I see is not setting a definite stop loss. And people either don't have a stop loss or they'll put a stop loss in that they keep moving. And so eventually they end up running these huge losers and only realizing small profits, which leads to, in the end, eroding capital. Rule number 3 is all about managing your trading size. And this is extremely related to the point we just talked about, which is, if we're going to say that managing your entry and exits is all about the reason and the way you invest, managing your trading size is all about the degree of conviction that you have in that particular trade. It's really answering the question of how sure are you that this trade is going to perform the way you expect it to perform? And so I think there's a couple of rules that one should always follow. And the rule number 1 is never put all your eggs in one basket. And what this really means is you always want to have dry capital. You always want to have capital that's available for that next idea that comes your way. You never want to be 100% fully invested. And rule number 2, I think it's always smart investing when you build into a position slowly. I think it's always great to build into a position and have a core position that you kind of trade around. So, you can always take profits. If the stock pulls back, you can add to the position if you still believe in that investment, but kind of have that dynamic management around a certain core that allows you to take partial profits and increase and decrease the position as the investment performs or it doesn't perform. The next point I want to talk about is something I have paid dearly for in my own investing career, and it's what I call, when you've had a winning streak, take a break. And what it boils down to effectively is every single trader every now and then will go on that winning streak, that every single trade they put on is a winner. And this can last days, weeks, potentially even months for some people. But invariably the streak gets broken at some point. And I found that over time, if I force myself to take a break from markets, go somewhere for a few days and stop trading, reevaluate everything and look at the market from a fresh perspective, I have better results. So next time you are on that lucky streak of winning trades, try to force yourself to take a break before the market forces you to take one. And finally, the last point really sums up this whole question about what does it take to be a great investor and trader. Great investors and traders are really amazing risk managers. And what separates them from the average investor is how they respond to being wrong. They understand that there's going to be a certain percentage of trades that they will just get it wrong. That's inevitable. But the difference is how they respond to being wrong and how they manage that risk. There is a great book written by Annie Duke called Thinking in Bets. Annie was a professional poker player on tour, winning multiple tournaments, and today advises and coaches hedge fund managers. And really the thesis of this argument is that you should always be thinking in bets. You should always be thinking in probabilities. How likely is a certain outcome that you're betting on? How likely is it that you're wrong? And how are you going to respond to being wrong? How do you manage that risk? Are you married to your position? Or are you flexible enough to change your mind and go the other way? And I think the most important thing is to understand that the primary goal for a successful investor is capital preservation. Growing the capital is job number 2. And so any successful investor and trader really thinks in these terms. How do you manage the risk? How do you manage the fact that you might be losing the capital that you're starting with? So that's it for the basic tips and strategies for today. Let me know in the comment section what worked for you. Hopefully you have more rules that you follow in your day-to-day trading and investing. And thanks for watching. I'll see you in the next video.